How is C Limited faring against Grab and Coupang? Which do I prefer? To see, wait, or don't even grab? Appreciate a like if you like this video and do subscribe to my YouTube channel. We see a recent news that Tencent is selling 3 billion worth of stake in Singapore C Limited. Tencent nevertheless mentioned that they will want to retain a majority stake in C Limited for the long term. C Limited share price tanked and get down below 200 USD after Tencent announced its plan to divest some C shares. Look at this. C Limited is already down by 22% year to date, and it's around 47% of all-time peak price of 302 USD. Coupang is down 26% year to date, and it's around 30% of all-time peak price of around 69 USD. In case you're not familiar with Coupang, it's better known as the Korean version of Amazon, where its business is predominantly in Korea, though it has embarked on international plans to expand to Japan and Singapore. Grab is actually very well known in Asia and is down 16% year to date, and it's almost 30% of all-time peak price of around 18 USD. Here is just a summary of what I mentioned earlier, as well as the recent price on 14 January. There's a percentage of drawdown from peak, 53% fall for C Limited, 70% fall for Coupang, and 70% fall from Grab for all-time peak price. Also bear in mind the various market cap for C, which is the biggest at 97 billion, Coupang ranks second, 37 billion USD, and Grab is the smaller at 23 billion USD. Given the price movement, C Limited share price structure definitely seems stronger compared to that of Grab and Coupang. While year-to-date price action-wise, Grab seems to have outperformed C Limited, but is this really the case? Based on a longer duration price chart as well as a recent year-to-date performance, I tend to prefer C Limited, but that is just based on price performance. I will go into the financial and operational performance shortly. This is just a quick recap of the news back in 2017 where C valuation used to be behind Grab, but is now at 97 billion USD market cap, which is around 4 times that of Grab market cap. So did anything go wrong along the way for Grab as compared to Shopee, C Limited? Grab does have fantastic product ranging from Grab Car, Grab Kitchen, Grab Food, Grab Mart, etc. And it's Southeast Asia focused with markets covering from Singapore, Malaysia, Vietnam, Thailand, etc. Bear in mind, according to Grab, gross merchandise value, GMV, did grow with each cohort as the years go by, meaning the user in his or her later years of using the Grab app will use it more for transactions, leading to higher GMV per user as the years goes by. But one thing I want to point to you is that Grab is still largely dependent on mobility, meaning movement. They need movement of people, movement of goods, etc. for it to happen in terms of churning the revenue. Whereas for C Limited, you have its e-commerce platform Shopee, the gaming division, the Garena, and financial services C Money. C Limited's revenue ranks second as compared to Coupang and Grab. But in terms of EBITDA, C Limited is still doing relatively well given that it has a profitable digital entertainment division, Garena. So you see here for 3Q 2021 adjusted EBITDA, C Limited is at deficit of 166 million USD, Coupang at 207 million USD, and Grab, even though it has the lowest revenue at 157 million, has a deficit of 212 million USD. Given that C Limited has been expanding into so many fronts including Brazil, India, Europe, etc., this has led to negative EBITDA margin despite a highly profitable gaming division. It has a negative 6.1% adjusted EBITDA as percentage of revenue. For C, you see, for Coupang it's negative 4.5%, and for Grab it's even in a more horrific situation, which partly also explains why it has been doing very badly in terms of price performance since its SPAC deal. Strategically, getting into a market early is important, which explains why I do understand C's limited aggressive expansion into other countries. You look at what they have experienced in terms of the gross orders, they've been going up significantly. And for GMV, it's also growing significantly over the years to 16.8 billion USD just for 3Q 2021. Now, C Limited GMV is almost 6 tons of Grab GMV. Coupang is still predominantly in Korea, though it has attempted to bring to Japan and Singapore markets like what I mentioned earlier. Even in terms of the payment volume, C Limited is leading. Coupang is not disclosing this level of detail for its GMV and payment for 3Q 2021. This is just a quick recap of what I mentioned. in my video on 11 Jan 2022, basically tech, especially the small to mid-cap tech stocks, are likely to remain weak on the downside. This is what I did in terms of showing the summary of certain US tech stocks performance on 13 Jan 2022, and you see that Sea Limited price is down 10% on 13 Jan, DocuSign was down 6%, Lemonade, Grab, etc. is down 6% and 2% respectively. Though there are a lot of use cases that Grab can work on, the road to profitability and cash flow positive is still a long way. I personally prefer Sea Limited over Grab and Coupang due to its current strength and future growth outlook. What's more, it already has a highly profitable gaming division which it can use its cash flow to fuel its expansion in payment services and e-commerce platform. That's a fantastic strategy, using a profitable division to finance the growth of other platforms that can create more revenue in future. But like what I mentioned earlier, the recent price pressure of high-tech growth stocks are still on the weak side. So to me, based on my risk reward, I don't think there's a need for me to rush into acquiring Sea Limited share at this current price point of 175 USD. So what I will do now, I will not be surprised if Sea Limited share price makes another down leg or few legs down if the support level around 160 USD cannot be held on to. Given that current market worries are over Federal Reserve Fed rate high and asset tapering program, I'll probably reassess Sea Limited again after it releases its 4Q 2021 results. Well, who knows, maybe it can save the company price in terms of not going down further, because the very fantastic, if they ever have a very fantastic 4Q 2021 result, it may reverse the downtrend. But until then, I wouldn't touch Sea Limited shares. As always, this should not be construed as any investment or trading advice.